Alcoa just reported after the close tonight, making the unofficial start of earnings season. And out of nowhere, the aluminum company that's about to break itself up into a commodity business and an engineered products concern delivered some truly better than expected numbers, which gives me hope that the global economy might be stronger shape than people think. Remember, Alcoa is one of those companies that I always tell you to listen to because they offer such keen insights into so many different industries: automobiles, aerospace, natural gas turbines, soda cans, trucks. That's why I liked it when I saw that Alcoa reported a 6-cent earnings beat off a 9-cent basis with higher than expected revenues, even if the absolute numbers were down year over year, mostly thanks to lower aluminum prices. So now that we're getting closer to the company's breakup, let's take a closer look with Klaus Kleinfeld, the chairman and CEO of Alcoa. Find out more about the quarter and how the split up is coming. All right, Klaus, we've got two companies here that we're talking about, at least next year at this time. It will certainly be the case. One of them is a chit on worldwide demand. The other is a chit on your engineering capabilities. In this quarter, the worldwide demand seemed to show a nice uptick, even though we don't really see it that much. Engineer just, kind of plodding along, doing some good things. What's your view of the world based on the fact that your commodity business was quite strong?
Yeah, well, I mean, it's still a low-price environment, but it's gotten a little better in the last quarter, and that's what you immediately see reflected in the results. And that's purely a fact of us having really driven down those businesses on the cost curve, restructured them. Productivity is strong in all of the businesses, also in the upstream business. And you see it's in this business. I mean, we have a low-cost position. The moment the price goes up, you immediately see it in the profitability. That's why this is a very attractive investment for those that are willing to live with some commodity pricing volatility, because that is a part that we can't influence.
Well, I don't want to dwell too much on commodity, but our viewers care. You have a line in your deck about how Chinese demand for bauxite drove a record quarter. We all are confused. We think that China's bad. We think that they already have too much of this. Your bauxite position is something they need to make aluminum, but this was a good quarter for that.
That's very true. It's not only a good quarter, it will continue to be good because China does not have enough bauxite. China these days imports roughly 40% of their total bauxite, and they will need to continue to do that. The bauxite reserves that they have in country are slowly depleting over time, so there will be more need for good bauxite quality. We are with Alcoa Corporation, #1 bauxite miner in the world with a very, very amicable bauxite position, close to the markets, high quality, highly differentiated product, because it's all about the question of how much alumina is in the bauxite material. So it's a great business to be in.
Okay, Arconic. I need people to understand what this business would have looked like a year ago versus what it looks like now. I mean, there wasn't as much aerospace last year. There is now. There weren't as many contracts that you got with aerospace or with auto. This company didn't really exist as a standalone. What will it look like a year from now?
We will continue on this path. I think you're absolutely spot on. And when we announced the separation last year, end of last year, I said that we have been building over the years to that point that enables us to have a strong engineering type business, which we have with Arconic, targeting towards a couple of markets. The strongest ones probably today are the aerospace as well as the automotive. Automotive, we will continue to see an increase in demand, and we are one of the premier suppliers for lightweighting solutions on automotive. And keep in mind, I mean, we announced at the end of last year also a record invention called the micro mill, which can now attack the last domain in steel that exists in auto. This is still to come in years, so that's all going very, very well. And then in aerospace, we were originally a supplier for a few components, and most of it was around aluminum and a little bit around nickel. Now we basically supply pretty much all of the parts that are in the jet engine. This has been done through organic growth as well as through the acquisitions that we've been able to make. Plus, we have become material agnostic. I mean, we now have a very strong position also with nickel alloys, with titanium alloys, as well as with aluminum, and even a little bit of steel, which is needed in this industry, right? And we can also provide the full structure of the plane. That's why when in this industry, if this industry goes well, we will always be on it. We are on every platform, on every jet engine. we make our customers more successful and win with them.
Okay, now, Klaus, there are some concerns. We saw an article in Bloomberg recently, the Wall Street Journal piece, about your debt side. I see you made some asset sales, cut some debt, but there will be a substantial amount of debt. Is there a way to be able to continue to make asset sales, or would you just sell equity to be sure that you felt comfortable enough in the debt position of the two companies?
Well, I mean, we have to, first of all, we have to look what the situation is going to be at the time that we separate, right? We released our initial Form 10 days ago, and what you see in there is a reflection of what we see today. And we said about $1 billion of debt will be loaded onto Alcoa Corporation, and that will be basically reduced inside of what then will be Arconic. We also announced I think a pretty intelligent solution, which is called the 80-20 solution here. So we will continue, Arconic will continue to have a 19.9% equity stake in Alcoa Corporation. The reason for that is basically when earlier this year we saw commodity prices coming down, debt markets kind of getting into a freakish environment, we said, what do we do to de-risk it? And to de-risk it and to get to a better way that we are not locking in a point in time in the debt structure. And this would have an opportunity to be monetized at a later point in time by Arconic. You could use it for all kinds of things. One would be to pay down debt. There might be other opportunities depending on how this looks. We also said that we will want to do this ideally in the next 15 months after separation, but we have 5 years' time. Right, and then there are asset sales, and you mentioned it already. I mean, the asset sales have been very successful on all kind of non-essential assets, and we will also continue to produce a lot of productivity this year. All of this hits the bottom line. All of this hits cash, and so. And the cash generation of Arconics will be good. I mean, that's the other thing, you know. There is enough strength in there to pay it down. That's why I'm not.
Klaus Kleinfeld, congratulations, big upside surprise, and look forward to seeing you next time. Not yet with the split companies, but very soon. Klaus Kleinfeld, Chairman, CEO of Alcoa. Thank you so much, sir. Splitting up, lots of exciting stuff, but get to know it before you pull the trigger. Mad Money's back into the ring. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.